Welcome to the Real P&L Trading Show, where I share my P&L on 3 accounts and share my proprietary SafeWheel options trade system for free. I do want to make sure that you guys can hear me okay. Please type in the chat there that you can hear me. I'd appreciate that. And be sure to post any questions you might have earlier rather than later. Sometimes I miss those last questions that come in, and I want to get to them all. All right, let's talk about what's going on now with the earnings edge. So what happened with the earnings edge last week? Well, the question is, was anything coming into earnings that fit through all the filters? And the answer is no. So I haven't traded the earnings edge for a little while because nothing has fit through all the filters. So, I haven't been trading it. Okay, Charles and Will, thank you for letting me know that you can hear me okay. I appreciate that. I know we're on a slight delay. Okay, so on the earnings edge, again, nothing going on there. Account value still the same that it's been for quite a while, $11,680. Of course, I started this account with $5,000. Let's look at the spreadsheet. Still record 27, 19, and 8 since my last update. 732 average win, 540 average loss, and you can see the returns in 2022, 2023, just underperforming there nominally, and outperforming nominally in 2024. Or let's update this. What is SPY trading for? 543.06. 543.06. Up 14.2% this year. Based on SPY, of course. So yeah, that is the earnings edge. Really nothing going on, because when there's not a lot of companies going into earnings, they have to be pretty liquid too. It's not just because they're in earnings, but they're liquid companies going into earnings. Liquid options need to be available for the earnings edge. All right, let's talk about the Premier Level 5. The Premier Level 5 has been not doing so well lately. Of course, we always knew the PL5 wasn't going to do well in a bull market, but this particular bull market is just not good for the PL5. When I say not good, it's not like I'm like other option instructors where if their system's not doing good, you blow up your account. That's not, to me, not doing good is down, whatever I'm down here, 5 or 8%. That's not doing good, right? So you can see my account here. Of course, I'm using IB with my PL5 account. You can see it's 32,516. Let's put that in the spreadsheet. 32,516. 32,516. Well, it's up a little bit. That's still down about 7.5%. Record 24, 9, and 11. This actually, let me update this. I think it's 24, 10, and then I have 3 open. Okay. Since April 8th, 2022, when I started trading the system, you can see I was up 11. The S&P was down 6 in 2022. 2023 underperformed, and obviously underperforming in 2024. So I found this, came into this market from 2015 all the way through until late 2023. The PL5 had outperformed easily, not in all the bull markets, but pretty much outperformed. Even in bull markets, it made money, but this particular bull market, it's not making money. So what I did was, I've been searching high and low, and it's taken me a couple months, and I finally figured out that I found a filter to filter out the trades, so to not be in this particular type of bull market. This particular type of bull market is different than any bull market we've seen since my back testing of 2015. And so I figured out a way to filter out this bull market. Obviously, I haven't filtered it out with the trades that I'm already in, but if I had started, if I had this filter back in late 2023, I would have applied it and I would have not been in this market. So that's what's going on with the PL5, which I'm very pleased to let people know that I found the filter for this particular market that I saw with this market that I hadn't seen through the back testing. So there are the results for the PL5. And also, you also notice that I show you my results even if I'm not making money. That might differentiate me a little bit from some of the other instructors. There's some people out there showing their P&L now, but they're all making money in the bull market. So we'll see what happens when the market turns against them. I think they're going to be forced to continue to share their P&L, and I hope that they do. And that'll be interesting for me to watch. It probably might be interesting for others to watch. And I'm not trying to say I want them to lose money. I'm just saying you got to show your P&L in the good times and the bad, right? Not just the good times. All right, where are we now? We are on the safe wheel. Let's go to the safe wheel. Let's get into the right account. Make sure it's this one. Okay, yes. So 6659, 6658. That is 6658. Let's put that in the spreadsheet. It's up a little bit. 6658. You can see the safe wheel, how it's performed. Nice 2022, right up 20%, where the market was down 20, so a 40% outperformance in 2022. So you can see that what the safe wheel does in different market environments. The bull, obviously, it looks like the bull market's not doing quite as well. 5% versus 24 in 2023, and then 3% versus 14 in 2024. But overall, still up nominally 33% versus 14. So outperforming overall since the beginning of 2022 when I started trading this live. And I get about half the drawdowns as the S&P. So you get a good return on risk with the safe wheel. Let's see here. So with the safe wheel, I need to trade it, right? Let's see what I'm going to do. So last week I did a Blaze of Glory trade, right? Just to blow out, see if I can get out of the position. And I did not get called away of my 200 shares. So I'm long. So I was left long 200 shares over the weekend and long my put hedge over the weekend. And then I came in and LI is up almost 5%. All right. So with LI up 5%, you can see that the account's down around $35, relatively insignificant, even though the account's up, or LI is up significantly. It's just not hurting my account at all. I mean, I'm down $35 today. So the question is, let's talk about taking care of the account now. So as far as managing, I've got my put hedge. What do? I've got 3 questions. Number 1, has my put hedge paid off? Well, no, I'm up $1,176 and my 200 shares are down $1,210. So my put hedge needs to be more higher than my loss on my 200 shares, and it is not. Okay, so I don't do anything with it. I want to be under 100 days, and it is. I mean, I want to be over 100 days, and it's under 100. So typically I would roll this, but as of right now, because it's in play, I'm not going to roll it. And then obviously, is the strike price close enough to the actual price of the underlying? Well, it's actually in the money, so it's 100% close enough. So what do I do now? The old rules would have said to just sell everything off. But what I'm going to do is another Blaze of Glory trade. I like the Blaze of Glory trade because I get double the returns. I'm going to sell covered calls against 200 shares. And where am I going to do that? It could be $18.50, could be $19. Let's take a look. Let's go to trade. I'm going to go into the nearest expiration, the one that expires this Friday. I'm going to look at what kind of premium I can collect. At the $19 range, I can collect this. At the $18.50, I can collect this. I don't necessarily want this stock to go up. So I'm not looking to write a covered call like the normal traditional wheel. Like I want the stock to go up, and then I collect the premium and also the distance between the strikes. I'm not worried about the distance between the strikes because my put hedge will probably lose a little bit of money there. So I'm worried about which one has the most extrinsic value. And what are we? We are 1870, so we're 20 cents in the money. And then, so this one's going for around 30 cents extrinsic. So I'm going to sell the 1850. I'm going to sell 2 of them. It's got the most extrinsic value in it. So let's do that. See what I can get. Mid price 53. Okay. Make sure I'm in the right expiration cycle, which I am. All right, that filled right away. Now what I need to do, I'm worried about my put hedge at this point because I'm at the 1815 level. I am going to lose my shares and I have no upside protection beyond 1850. So I'm going to buy a couple of $5, maybe $6 calls. See if I can get it for $6. Okay, maybe not. So let me do something here. I'm going to, because I can't get it for $6, I'm just going to straight up cancel that order and I'm going to go into a different strike. I'll go to this one. And I want to get 2 of those. And probably can get it for $4. Let's see. Yeah. Okay. So I couldn't get the $20 strike for under 7. So I went to the 20.5 for 4. Okay. So there, I probably made $100 or approximately in premium, brought about $100 in premium into the account. That's one thing I like about the Blaze of Glory is you can get a lot of premium, twice a premium that you normally get. And that really helps out with the trade. You can see ever since I've been doing the Blaze of Glory, the account has been up. So I like this trade. And again, here's the net lick. Okay. So now that I say I did the trade, let's go to any questions or comments. Let's see what's going on here. I appreciate you guys, Charles and Will, letting me know. Charles says next earnings session starts mid-July. Yeah, well, typically whenever it starts, it's the week before that when the earnings edge comes into play. Shovel says he's first even though he wasn't. Shovel shares his P&L. Yes, I like that. Riding the Blaze of Glory all the way down. That's right. I think I've applied the Blaze of Glory now 3 or 4 times. So what I've been able to do is sell covered calls against 200 shares, not just 100, like 3 or 4 times. Pretty significant. All right, what is the duck system? So the duck system is a system that I have a former student of mine who is a coder, and he took the Black-Scholes system and he coded it, and he created a system which we call the duck. He created a trading system, and then I created rules around it, and it's back tests. Well, you can see what it says here in the scrolling, but it's a very good system. I really like it. Very good risk reward return, like 1/7 the drawdowns, positive theta, positive gamma. I mean, it's 20% average return. It's a great system that we've developed there. And we're probably going to be launching just that system here in around 3 or 4 weeks. So you want to get on that waiting list if you're interested in looking at it in more detail. And just hit the link in the description. There'll be a area there where you can get on the waiting list. Neil says, I'm with you. I'm assuming you were talking about the safe wheel, that you're trading the safe wheel the same way that I am. I'm not sure, though. Will says, nice update on your profile picture. Yeah, actually, I took that picture with my family, and then I told my editor to put me in a suit. And then she did a good job with that. The picture was good already, but then the surroundings were changed. It's better than having to go to a studio, right, and paying all the money and everything nowadays. It's just AI. Zoli, Safe Wheel with 5 to take 10K account. I can trade one with $20 to $40 stock. Yes. Can I choose a $15 stock? But with every doubled 6 long. Oh, okay, I see what you mean. You probably could do that, but I would back test it. And the problem with $15 stocks is a lot of times they don't have a lot of premium. In other words, just nominally the premium isn't there. And if it is, it's because they're really a high flyer. So I've found that the 20 to 40 stock works well, but you would want to, if you want to double up everything, you probably want to go half, right? So that would be 10 to 20. Yeah, so $15 stock, you could probably do that as far as the sizing, but back test it. I haven't back tested it that way, but the numbers should fall in line. But you should back test anything that you do. Will, I still think the Blaze of Glory is a bit too risky for our account size compared to doing a reset. Can you look at your risk graph and maybe compare it to a reset on a paper money account? Yes, I have done the study. Okay, so if you're in the course, I did the study where I compared not doing it with doing it, and with the live account, and I can't remember how many occurrences there were. I think there were 3. There were only 3 occurrences where I would have done the Blaze of Glory, and the Blaze of Glory shows that it was favorable to do it. So if you're not in the, if you haven't taken the course, I don't think you have access to that information, but that's a study that I did, and I put a video out on it. Mutual says, thank you. You're welcome. I noticed we sold 2 calls in the money today. We've never done that before, have we? Instead of the 19 strike. How did you determine which to sell? Is it clear in the rules? Actually, it's not. I need to make it clear. Basically, the one with the most extrinsic value. I'm going to write that down so I don't forget. The most extrinsic value. That's the one that I sold. If you remember, it was around $50 and it had $30 in extrinsic value, and then the 19 strike had about 20 cents in extrinsic value. I don't know if that's still holding right now. Let's take a look. Okay, yeah. So this one here, the 19, well, now it has about 30 cents in extrinsic value. So, you know, the market moved up a little bit. Now they're pretty, this one probably has the most extrinsic value now, 19, as opposed to the 1850, because you got to subtract 70, you got to subtract 27 from this. So this one only has around, no, they're about equal. They both have about 30 cents in extrinsic value. So either one would work right now. But at the time when I made the trade, the 1850 strike had the most extrinsic value in it. So that's why I chose it. CSIQ is a good candidate for stocks under $20. Make sure that you know what the filters are. There's 6 filters, and make sure that it passes through all 6 filters. So it's pretty easy to just run it through the filters to see if CSIQ would be a good candidate. For a beginner, can you show where you see extrinsic value? You know, actually, there's probably a place in here in the settings. I don't remember how to do this right offhand real quick, but there's a setting that where you can build a column, because this is the delta right here. I can see if I can get extrinsic value here. Extrinsic. That should do it. Let's see. Yeah. So the extrinsic value right now for the 19 is 32 cents, and the extrinsic value for the 1850 is 28.73. So you can create a column here, and it'll tell you which one has the highest. So you can see the highest extrinsic value at this moment is the $19 strike compared to the rest. And you can see when you get closer to the money, that's where your extrinsic value lives. And it just depends on whichever one is closest to the money there. That's where it's going to live. Let me put this back. I had that delta. So yes, that's and what does that mean? It just means how much is the option worth um, while it's not in the money. That I'm not sure. There's not an easy way to explain it really quick, but if it's in the money, you have to subtract that part of it out. If it's out of the money, it's all extrinsic value. Okay. All right. Thanks, Will, for bringing that up. I appreciate it. And Neil says you may want to show in the options chain how to display extrinsic value of each strike. Yes, I just did that. We think alike, Neil. Appreciate that. Okay, let's see. I don't see any more questions. I always get questions right at the end, and I'm ending the broadcast, and then I can't answer the question because I'm no longer live. But I don't see any more questions. So I'm going to say this in parting: if the P&L is not real, what else are they trying to conceal? All right, I appreciate you guys, and I'll be back next week.